The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. Always appreciate it. The number to use to call if you want to talk to me about this market, do it toll free, 877-927-6648. Every Tuesday and Thursday on TFNN from 3 to 4 Eastern, you can hear my show. You can also get the show as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just open up your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. If you want to look at charts live with me as I do the show, you can do that on Tiger TV at tfnn.com. Just tune in to Channel 1 right on the homepage, and the show is archived on Channel 13. And you can also watch Tiger TV on your smartphone as well. All right, let's get a refresh on the S&P 500 chart. Yeah, price and volume in the major averages today was sketchy for a while there, but we do have the S&P 500 right now up near its session high. It's still down close to 2 points to 1299 on the S&P 500. Still making a case it wants to hold its 200-day moving average here at 1284. We are 1, 2, 3, 4, 5, 6, 7, 8. Today is day 8 of a rally attempt for the S&P 500. So, just really looking for a sign of strength. Good accumulation day for the major averages. At this point, it's best to see a sign of strength in all the major averages at the same time. It's not mandatory that happens, but if we can see a percentage gain, 1.5%, 2% or more, and volume picks up from the prior session, hey, it wouldn't be out of the question. We could see it as early as tomorrow. We could see it sometime next week, but that would confirm a new uptrend, and then we'll have to see what the market is presenting in terms of buying opportunities. What growth stocks out there have set up properly? Which growth stocks are, breaking out to new high ground from solid consolidation areas in heavy volume? Sometimes you can get a follow through. Sometimes you can get a buy signal from the market, and it might take a little while for leadership to truly take shape. But if you do get that buy signal, and if you do see one tomorrow, if you do see one next week, there's probably going to be able to find 1, 2, 3 stocks out there that are moving higher in heavy volume. So we can't give up on the possibility of a rally here. There's just so much negativity out there in the market with the euro getting creamed on a daily basis, and the dollar, just going up seemingly every day. The bond market continuing to attract buyers. There's a lot of negativity out there. We're getting weak manufacturing data. A lot of negativity about the possibility of a weak jobs report tomorrow. But have to remember that market bottoms are, put in when they're least expected. I really don't have any idea how the market is going to react to this jobs report tomorrow. That is why I am mostly in cash at this point with my Ultimate Growth Stocks model portfolio. If you want to get a trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. It's 30 days free. You can't go wrong. 30 days free. Just get familiar with my approach to the market. I do have a model portfolio along with my newsletter, so I update it every Tuesday, and then I send out email, buy, and sell alerts in between. I've been pretty quiet lately, just not much out there to buy. For every 100 growth stocks that I look at, I might find 1 or 2 that are compelling, and 98 or 99 that are technically damaged. So, the odds just aren't in our favor right now to make money, but we have to be open to the possibility that could change soon, or it could take a little while longer. What I know right now is that my screens are virtually empty, seeing some decent bases being built. In other words, stocks that have been strong performers in recent months, and they've paused, they've digested gains, they're consolidating, and working on the right side of bases. But that process is still going on as well. So seeing some constructive action out there, but above all else, we really need to wait for that buy signal in the market. All right, let's move over, take a look at the NASDAQ composite. See that the NASDAQ composite is also up off its lows. It is still down about 8 points, 0.3% to 28.29. You see still holding its 200-day moving average as well. Day 8 of a rally attempt for the NASDAQ composite. So U.S. dollar index recently trading around 83 thereabouts. It's been kind of going back and forth between unchanged, right around unchanged for the day. But let's take a look at the U.S. dollar index, and this is the daily chart for the U.S. dollar index, and this is as of Wednesday's close. You can see that the dollar made another big move yesterday, up 54 cents to 83.02, and right now just holding on to gains, mostly unchanged on the day. I saw at one point it was down a couple ticks to 83, then up a few ticks to 83.03. So holding on to gains, and the FXE. Let's check the FXE, which basically tracks the euro. This is the currency share Euro Trust, and it is down for several sessions in a row, down another 5 cents today to 123.01. So obviously that's a headwind for the market. There's some saying that the euro is so oversold at this point that if any buying does start in the euro, that could funnel money out of the dollar, weaken the dollar. That could bring buyers into the stock market. So even though I am, slanting bearish at this point, I have to stay open-minded. Again, I do follow a pretty strict set of rules for the Ultimate Growth Stocks model portfolio. When you follow rules, it makes things a little bit easier. You tend to keep the emotion out of it. And right now, just waiting for a buy signal from the market. Until I get that, be generally keeping the powder dry. Seeing a little bit of volume in the market today. Volume on the NASDAQ and New York Stock Exchange tracking about 5 to 10% higher than what we saw yesterday. Yesterday on the NYSE, volume average at 1.63. That's NYSE volume was average at around 760 million. Volume on the NASDAQ yesterday was also around average, 1.63 billion. So we are tracking a little bit higher than that today. Seeing several growth names out there flirting with their 50-day moving averages. Let's take a look at eBay. There were a lot of big sellers in eBay yesterday. Stock is under additional selling pressure today, but you can see that 50-day moving average, just pretty solid support level right now. eBay is, most growth stocks are underneath their 50-day moving averages. Okay, most growth stocks have been consolidating gains. eBay has been a strong stock, no doubt about it. But when you're in a weak market tends to take just about everything down with it, even the strongest of the strong. There's been a handful of growth names, maybe a little more than a handful, but several growth names that have been able to hold their 50-day moving average. eBay is still doing it, but it is down another 1.1% today to 39.16. But there was big volume in the stock yesterday, big wide price spread here on Wednesday. So there were some big sellers in the stock yesterday. Let's also take a look at Cerner, C-E-R-N. This is a high quality healthcare name, also holding above its 50-day moving average. But I think both of these stocks are vulnerable here, and again, if you do get a buy signal from the market and they do bounce off these support levels and eventually break out, you could probably get back into them because they are two high quality stocks. But they are, again, looking a little bit vulnerable. Shares of Cerner down 2.2% today to 77.50. $2.98. Some bright spots in the market. My show was off yesterday, but I did want to touch on the fresh market. TFM, Tom, Frank, Mary, the fresh market, following through bullishly today, up another 4% or so to 58.48. Stock had a big day yesterday, broke out over a swing point. Swing point was right around that 54 level, 54.97 actually, pretty close to $55 right here, but good solid breakout for the fresh market. Follow through today in strong volume. The earnings yesterday, caught a lot of eyes. There's no doubt about it. Their earnings were up 33% from a year ago to 40 cents a share. Sales growth accelerated from the fourth quarter, up 23% to $324.8 million. Same-store sales up 8.2%. So all the fundamental metrics look really good here. And my take on the fresh market is that you've basically got two choices in upscale grocers. You've got Whole Foods Market, and the fresh market. Whole Foods looks like it has made a massive price move already. Let's go ahead and take a look at Whole Foods Market, WFM. You can see it is basing nicely. It's back above its 50-day moving average. The stock is doing nothing wrong from a technical perspective, but let's take a look at the weekly chart for Whole Foods, and we'll see that it has just made a massive price move. And in fact, this is a monthly chart for Whole Foods Market. This is a monthly chart, so you can see the move it's made from 2009 through today. Just a massive price move. And you compare that to the fresh market, and this is a company that came public not that long ago. It's still a relatively new publicly traded company, still in the early stages of growth, still in the early stages of expansion. So I do like the fresh market. Why don't I own it right now? I'm staying disciplined, following my rules. I'm going to wait for the buy signal from the major averages, wait for hints that new money is coming in from the sidelines, and then that is when I'm going to start nibbling at some high quality growth names. But certainly those that bought the fresh market yesterday on its big gap up in price, it was up about 15% yesterday, closed not that far away from its swing point of 54.97. So even though it was up 15% yesterday, it was still pretty close to that swing point. But if you'd bought yesterday, counterintuitive as it was, you'd be sitting pretty today, because the stock is up another 4% today. So the fresh market doing well. Let's take a look at a retailer that reported good same-store sales results today. That would be TJX Companies. No surprise here. TJX has just been a tremendous performer. My friend Stephanie Link over at ActionAlertsPlus.com has been a big proponent of this stock for a while. TJX up 3% today to $42.60. Same store sales up 8% at TJX. Much better than estimates for a 5.3% gain. A lot of other retailers in the news today. I want to take a look at a small cap retailer that actually has the look of a potential leader here. That's going to be ticker ZUMZ. When we come back, we'll take a look at Zoomies, some other retailers, and some other interesting growth names out there. We'll do that when we come back in about 4 minutes. You're listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you on TFNN. Breakout Investing is the name of my show. Before we went to break, talked about some nice same-store sales numbers from TJX companies. Let's also check in on shares of Zoomies, Z-U-M-Z on the NASDAQ. You know, this company has really proven itself to be a retailer to watch. It's not the most liquid of stocks. I mean, the average daily volume is close to 400,000. It is a small cap, 1.1 billion market cap, but I'll tell you what, strong balance sheet, good bottom line and top line growth in recent quarters, sales growth accelerating in recent quarters, still in the early stages of being discovered by growth fund managers out there. I like this stock a lot. Retail can be fickle, but this company is well positioned for growth, and their same-store sales proved it again, up 13% in the month of May. Estimates more than double expectations, because estimates were for 6.6% growth. Demographic for Zoomies is 12 to 24. They do action, sports-related apparel, the skateboarding crowd, surfing, motocross, snowboarding, things like that, clothes, footwear, all kinds of stuff. But stock is up 5.6% today to 36.71. And let's take a look at a weekly chart for Zoomies. And we'll see a nice little base taking shape here. You can see a monster breakout. Here's a big long consolidation started right here. You see the breakout right over in this area here. Boom, takes off. Now it's forming another base. Almost 5 weeks into a new base, but it is back above its 10-week moving average, retesting its prior high. Just a tremendous execution at Zoomies, and this is one to watch if the market should decide to head higher in the near term. I think Zoomies is a retailer that could outperform. Some other bright spots in the market here. These dollar retailers continue to work nicely. Let's run through them here. Dollar General looks like a new 52-week high today for Dollar General. The stock is up 1.6% to $49.32. This is stock, again, very strong balance sheet. A lot to like about this stock. The last buying area for Dollar General, yes, is where it gets a little bit tricky. To me, the stock looks a little bit extended in price. I suppose you could call this 47.59 area the last swing point. I haven't seen major amounts of accumulation in this stock, but it's hitting 52-week highs in an uncertain market, so it is definitely attracting buying interest. Let's take a look at DLTR, Dollar Tree. This is another stock you can see up 9-10 days in a row. Kind of a V-shaped look to this consolidation here, but still a stock that is flirting with a breakout as well. Haven't really seen much signs of accumulation in this name either, but let's see, 1, 2, 3, 4, 5, 6, 7, 9 days in a row up in price and flirting with a breakout. So we'll see what Dollar Tree has in store in coming days. And finally, Family Dollar Stores, FDO. So the dollar stores continue to work well here. Shares of Family Dollar Stores up 1.4% to 68, and you can see FDO, nice bounce recently off its 50-day moving average. Again, not much volume. You had some heavy volume back in here when it came down to its 50-day. It's been rallying in light volume, but it did firm up nicely at its 50-day moving average. So the dollar store is looking pretty good here. And how about shares of Expedia, EXPE? This is another online travel firm. Shares of Expedia just strong as strong can be. Up another 1.7% today to 46.22. Can't say the same for a company that Expedia spun off recently. TripAdvisor.com. This is a website where you can get sort of it aggregates reviews of destinations, things like that. But shares of Trip actually has recovered off its lows. It hit an intraday low today of 42.14, but the stock is now up 24 cents to 43.40. Still holding well above its 50-day moving average. So Trip continuing to show relative price strength. Interesting to see these two online travel companies work, and shares of Priceline, however, continue to face quite a bit of selling pressure. To me, it looks like its 200-day moving average right around 568 or so is in play. Doesn't look like it's going to make a meaningful attempt to get back above its 50-day moving average anytime soon, but shares of Priceline today down 1.7% to 627. Europe is the problem here. Europe is a fast-growing area for Priceline, but with all the uncertainty out there, it's definitely weighing on the stock. All right, folks, stick with me. We'll be right back. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to the program. Let's check in on the S&P 500 here. Looks like we're going to try to turn green here as we head into the close. 25 minutes left to go in Thursday's session. S&P 500 now up a little more than 3 points to 1316 now on the S&P 500. It hit an intraday low of 1299, so it's now up about 17 points from that low. NASDAQ composite, let's take a look and see where that is. That is now just down a fraction, half a point to 2837, up near its session high. So looks like we're going to get a green close here. What does that mean? Does that mean that we're bound to head higher tomorrow on this jobs report? Nothing would surprise me. Nothing would surprise me at this point. A lot of bears out there, a lot of bearish sentiment. Very weak reading in the Chicago Purchasing Managers Index. Earlier today came in at 52.7 from 56.2 in April. Economists expected a slight increase to 57. Remember, earlier this month, the Philly Fed came in with just a dismal reading. We've got the ISM Manufacturing Index tomorrow alongside the employment report. We're probably not going to see a good reading there, and it remains to be seen what this employment report is going to look like. But you know what? The market is is crazy enough, is counterintuitive enough that we could see disappointing numbers. We could see a rally tomorrow. And again, with that PMI reading earlier today, that should have given reason for the market to close lower, finish near lows, get some more selling pressure in this market, but doesn't look like it's ready to do that. So we could see data tomorrow that could fuel a rally. So rest assured, I'm going to be ready for either scenario. And if we do get follow through, if we do get a buy signal from the market, it'll be time to slowly, cautiously start to wade back into this market, dip your toe in the water, see what is out there worth buying. But so on top of that disappointing reading from the Chicago PMI earlier today, we did have quite a bit of economic data earlier today. We had the ADP employment change, which was also disappointing. Non-private payroll growth of 133,000 in May. That was below the estimate of, give or take, 160,000, so disappointing there. Weekly jobless claims up 10,000 to 383,000. Nothing overly alarming there. It is a 5-week high. Second estimate to first quarter gross domestic product, that came in at 1.9%, pretty much in line with expectations, a little bit slower growth than the 2.2% clocked, which was the first estimate. So tomorrow, non-farm payrolls are expected to rise anywhere from 150,000 to 175,000. Remember, in April, the economy created a disappointing 115,000 jobs. The unemployment rate expected to stay where it is, 8.1%. Also Friday, we're going to get personal income and spending data for April. I mentioned the ISM manufacturing index, and that's it for economic data. Tomorrow. We did have a couple of earnings reports I wanted to take a look at today. These are not leadership stocks by any means. Let's take a look at Joy Global, a stock that has just been beaten down mercilessly in recent months. Shares of Joy Global down close to 5% today to 56.24. 56.24. Mining equipment maker warned of tough times ahead, weaker energy demand, and a shift by U.S. power companies to natural gas. Bottom line and top line growth was there. It was actually better than expected. Earnings up 29% from a year ago to $1.98 a share. Sales up 45% to $1.54 billion. Again, better than expected, but this is a stock chart that is clearly has been pricing in slower growth ahead, and you have to wonder if the selling pressure is slowly but surely getting exhausted in Joy Global. The stock did hit an intraday low today of 53.26, but it is trading up at 56.24, pretty much at its intraday high for the day. Also had earnings from Movado Group, MOV. This is a premium watchmaker. Pretty good chart ahead of the report. It gapped up last week above its 50-day moving average, but stock is showing some wild price action today, down close to 2% to $27.93. It made 26 cents a share, a big increase from 2 cents earned in the year-ago quarter. Sales up 15% to $103.7 million. Company also declared a quarterly dividend of 5 cents a share. Mentioned some same-store sales data from many of the nation's retailers. Let's continue on with some of these other retailers. But actually, before I forget, let me touch on gold here. Gold today down just a little bit, $1.50 to $1,564.20 an ounce. Let's check in on the GLD. Spider Gold Trust. This tracks at 1/10 the price of an ounce of gold bullion. Trying to find a bottom here. GLD is down 5 cents today to 151.86. GLD is going to face a lot of overhead resistance, a lot of overhead supply as it tries to work its way higher. The first formidable resistance level for the GLD is going to be that 50-day moving average right around 157.84. It's about 6 points below that level right now. So We'll see if GLD can start to rally. It's going to need a weak dollar, most likely, to do that. But still technically hurting here. Oil down 1.5% to 86.53 a barrel. For the month of May, oil was down some 17%. So a very rough month for oil. And speaking of the month of May, major averages. NYSE Composite, New York Stock Exchange Composite Index, currently on pace to be down about 8% for the month of May. NASDAQ Composite, Russell 2000, down about 7% or so, and the S&P 500 bringing up the rear, down about 6% for the month of May. All right, back to some of these retailers. Let's take a look at Target, a large cap retailer that is doing a lot of things right. Good technical setup here. I like the look of Target's chart. Stock is up 35 cents today, 0.6% to 58.14. Target same-store sales up 4.4% in May, better than estimates of 3.5% growth. Let's check a weekly chart for Target and show you why I like this technical setup. This is a classic example of a base building stock here. And again, market direction is most likely going to have a lot to do with what we hear tomorrow in terms of the employment report and the ISM manufacturing data. But this is the type of technical setup. If we do get a nice pop in blue chips, if it's broad-based, not only blue chips, but large cap, mid cap, small cap stocks, Target could try to make a move and break out with conviction over this 58.63 swing point right here. So like Target's technical setup a lot here. Doesn't have the explosive earnings and sales growth that I like to see. Is it an innovator? Probably not. But it is attracting institutional buying interest, and that's important. So let's watch Target here for a potential breakout over 58.63. Moving on, taking a look at Costco, also in this same-store sales realm. Shares of Costco climbing back above its 50-day moving average. Good for this stock. Costco up 1.4% today to 87.03. The same-store sales results here were a bit disappointing. They rose 4% in May, but the estimate was for 4.3% growth. So Costco's still in the process of building a base here. I do not think this stock is near a buy point yet. I think Target looks much better technically than Costco at this point. Let's take a look at Limited Brands Ltd. This is a stock. They do Victoria's Secret, Bath and Body Works. Tough day for Limited Brands. It's down 2.7% today to 44.60. It looks like it could try to pay a visit to its 200-day moving average at 42.25. A stock that is basing, consolidating gains, but it looks to me like big investors have been selling this stock since pretty much late April, early May. We'll see if it can firm up at its 200-day moving average. Fundamentals don't look that bad to me. Their same-store sales were up 6%. Estimates were for 4.7% growth, but still limited under a lot of selling pressure in recent weeks. Take a look at Gap here. As we finish up our run-through of the retailer, shares of Gap hit an intraday low of 26.12. It is now trading around 26.65, down just 2 cents. Gap is a nice turnaround story. I mean, there are a lot of people that had left the company for dead, but you can see a nice big rally in the first quarter. Stock hit a high of just over 29 in early May. It's now basing underneath its 50-day moving average, just taking a breather. It's going to be a little while before we see a new entry point in Gap, if it ever comes. It just depends how this base completes. Let's take a look at Lululemon. We didn't get same-store sales results from Lululemon today, but the company it will report earnings on June 7th. So coming up soon. That's going to be before the open. Earnings expected to be up 36% to 30 cents a share. Sales up 45% to just over $270 million. Lulu is another example of a base building stock here, but is it going to be able to get back above its 50-day moving average? This is a big question mark, and there are a lot of other stocks in this position right now. So while I'm open to the possibility of an uptrend starting here, I also know that there are a lot of stock charts out there that are very questionable right now. So it's not clear to me, for example, if Lululemon is going to be able to lead this market higher if the major averages start to turn higher. Another stock having problems at its 50-day moving average. Let's take a look at Starbucks. See, Starbucks, same deal. It tried to get back above its 50-day moving average last week, was turned away, still basing consolidating gains. This stock is nowhere near a buy point. Yum Brands, large cap stock. It's also been basing. See the problems here. Just not able to get back above what was once a support level for the stock. So Yum Brands showing questionable action around its 50-day moving average. Salesforce. A lot of people still like Salesforce, but this is a stock that's basing nowhere near a proper buy point. It's down 1.4% today to 138.93. What was interesting, I think it was either yesterday or the day before, that Goldman Sachs, I think it was, came out and raised their price target on Salesforce to 190 price target on Salesforce. Now, there's no question that this company is the leader in the field of customer relationship management software. It's a big player in the cloud field, but this sector has been under quite a bit of pressure. I know Salesforce still has its fans out there, still a company with very bright growth prospects, but still a stock that's not going to go anywhere until new money starts to come in from the sidelines. And when it does come in, let's see if it starts coming back into Salesforce.com. If it does and it starts working on the right side of its base, we may have to start giving this one some respect again. But right now, it's basing. Not clear to me that it's ready to start an uptrend. All right. Let's see what else we got here. Let's check in on some of these NASDAQ 100 names. Intuitive Surgical. Another stock that's basing. See, it fell below its 50-day moving average recently. Kind of firming up here in the $525 a share level. But, that's the story in this market. Just a lot of stocks that are basing, consolidating gains, taking a breather. People are asking me where the new leadership is going to come from. That, I'm not going to guess at where it's coming from. That remains to be seen. When the market confirms a new uptrend, we start to see institutional money move into certain names. The institutional investors are going to tell us where the new leadership is coming from. Until that happens, it's pointless to try to guess where the new leadership will be. Take a look at Chipotle Mexican Grill. Another stock tried to climb back above its 50-day moving average a couple of days ago. What was that, on Tuesday? Made a nice move. Pretty good volume. You can see some nice volume down here. So it is basing. This is one you can't quite give up on yet. It has made a pretty significant price move in recent years, but it's liquid. It's institutional quality. It still has a pretty big fan base in terms of growth mutual fund manager. So Chipotle is another base building stock. And finally, let's take a look at a name that I think does have the potential to be a leader, and one that I'm watching closely here, Equinix, data center operator, up 56 cents today to 163.09, basing nicely above its 50-day moving average. I still think this stock has potential. All right, folks, coming back in just a few minutes. Stick with me. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a 1-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. About 5 minutes left to go in Thursday's session. Let's just run through the major averages here. Dow up close to 10 points to 12,429. NASDAQ underperforming, up 7 points. Down 7 points to 2830, and the S&P 500 pretty much unchanged, just down a small fraction to 1313. Let's check in on shares of Facebook. Shares of Facebook hit an intraday low of 26.83 today, but look at the stock trading all the way up at 29.07, up 88 cents on the session. So Facebook trying to make a case that people wondering where the bottom is in this stock. Hey, maybe that $26, $27 level could be it for Facebook. I've just said that this is not a stock I'm interested in owning at this point. Really going to need to see more signs that mutual fund managers want to own this stock. I don't think that's the case right now. Still a tremendous lack of visibility at this company about how they're going to be able to grow earnings and sales meaningfully in coming quarters, because 10, 15, 20% growth, I'm not sure that's going to be enough to cut it, selling at the valuation that Facebook is. So I've made no secret of the fact that this is a company that does face a lot of challenges ahead, and that's a big reason why it's lost $9 or $10 since it went public at $38 a share. There is one new issue that I wanted to take a look at. A company called Synacor. Synacor popped up in my screens. I mean, this is a super strong stock. Synacor. Let's see, when did Synacor came public? In February, earlier this year, at $5 a share. So it was a cheap IPO. They really knocked down their offering price quite a bit, but it came public at $5. Now it's trading around $14.59 a share. But this is a company with a good example of what new is, how a new product or new service can really drive growth. And Synacor's technology, this is SYNC. Sam, Yo-Yo, Nancy, Charlie. The company's a software, basically a technology platform that helps cable TV firms, satellite operators, basically offer online content and services to subscribers. So this is an interesting company. SYNC is the ticker symbol here. They turned their first profit in 2011. I think they were also profitable in 2009, but it has been a money-losing company. But in the latest reported quarter, they did make 4 cents a share in the first quarter, up 300% from a penny a share in the year-ago period. They did $30.7 million in revenue in the first quarter. That was up 64%. From a year ago. So you are seeing accelerating sales growth here. It is speculative, but no doubt that this is a stock under serious accumulation here, and therefore one worth watching. It is pretty liquid, average daily volume close to 800,000 shares, but it is small. It's a market cap of $500 million, so you need to keep that in mind too. Stocks under accumulation, they are certainly have been the exception, not the rule in this market. So I figured I'd mention Synacor as a bit of an anomaly in this market, just because it does continue to show pretty good signs of accumulation here. All right, coming up after the close, let's take a look at Ascena Retail Group, ASNA. Ascena Retail Group operates women's apparel and accessories stores. They're going to be coming out with earnings after the close. Stock is down 59 cents to $18.93 ahead of the results. Splunk, SPLK, also set to report earnings. Thanks very much for tuning in, folks. Let's hope for a good jobs number tomorrow. Coming up next, the Tom O'Brien Show. We'll see you later.